The current live price for SWMR Inc., trading under the ticker SWMR on the Nasdaq, is $26.36 as of 4 p.m. EDT on March 23, 2026. The stock experienced a significant intraday decline of 10.35 points, representing a 28.19% drop from the previous close. While many investors expected the post-IPO momentum to carry the stock toward the $100 mark, the reality of high volatility and cooling enthusiasm has hit the tape hard. This price action serves as a stark reminder that even the most hyped entries into the public market must eventually grapple with the gravity of their own financial statements. The expectation was a continuous moonshot fueled by the urgent demand for defense technology. The reality is a sharp correction as the market attempts to find a sustainable valuation for a company that is still very much in its infancy. This gap between the narrative of autonomous warfare and the mechanical reality of a 28% single-day slide is where the true story of SWMR begins. The movement we are seeing today is part of a broader high-stakes tug-of-war between retail momentum and institutional caution. SWMR made a massive entrance just days ago, pricing at a mere $5 and exploding by over 500% in its debut. When a stock moves that fast, it attracts a specific kind of attention. We saw massive volume spikes, over 21 million shares in some sessions, which usually indicates that both large-scale funds and individual brokerage accounts were fighting for a piece of the action. However, today's volume and price drop suggest that some of that hot capital is rotating out. Investors using platforms like the Robinhood app or engaging in online investing through various investing sites are often the first to feel the burn when these parabolic moves reverse. The volatility is so intense that we've seen multiple trading halts, a phenomenon that occurs when the exchange tries to prevent a total free fall. If you are practicing self-investing or looking for investment help through automated tools like a SoFi robo-advisor, this is exactly the kind of environment where risk management parameters get triggered. Institutional activity has been the invisible hand behind these swings. While the retail crowd was piling in via the Robinhood trading platform looking for the next Nvidia stock level of growth, institutional players were likely looking at the lockup periods and the small float of only 3.45 million shares. A small float means that even a moderate amount of selling pressure can cause a massive percentage drop, which is precisely what we are witnessing. Fidelity Wealth Management and other high-end Fidelity brokerage services often emphasize the danger of thin markets like this. For those holding SWMR in their Fidelity IRA or Interactive Brokers account, the lack of a deep bid under the stock during a sell-off is the primary risk. This is not like trading Apple stock, where the liquidity is vast enough to absorb almost any blow. With SWMR, once the sentiment shifts, the exit door becomes very narrow very quickly. The expectation for SWMR was built on its high-profile leadership and its presence on the front lines of global conflict. Having Eric Prince, the founder of Blackwater, as non-executive chairman provided a level of perceived authority that most startups simply don't have. The market narrative was that SWMR would provide the operating system for the future of conflict, moving away from expensive manned platforms towards low-cost AI-driven drone swarms. This is a powerful story. It's why people were willing to pay $60 a share for a company that only brought in about $309,000 in revenue last year. But the reality is a balance sheet that shows an $8.5 million net loss and a burn rate that required this IPO just to keep the lights on. When the reality of those numbers started to circulate, the buy everything mentality shifted towards a show me the contracts mentality. Let's look at the business itself, because understanding what they actually do is the only way to separate the noise from the value. SWMR doesn't actually build the physical drones. They are a software-first company. They develop the AI that allows a single operator to manage dozens or even hundreds of drones simultaneously. Their software handles the coordination, the navigation, and the mission execution autonomously. Think of it as a hive mind for robots. This vendor-agnostic approach is clever because it allows them to partner with any hardware manufacturer. In theory, they could be the software layer for a fleet of drones purchased through any government contract. Their technology has been battle-tested in Ukraine, with over 100,000 combat missions completed. This battlefield pedigree is their strongest asset, as it provides a level of data validation that competitors in a controlled lab environment simply can't match. They are essentially selling a veteran AI. Despite the recent slide, the macro environment for drone technology is exceptionally strong. Geopolitical tensions in the Middle East and Eastern Europe have made autonomous systems a top priority for defense departments worldwide. We've seen major contracts being awarded to private firms like Anduril, and established players like AeroVironment are actively acquiring smaller tech firms to bolster their AI capabilities. This sector-wide momentum often lifts all boats, and it's why SWMR was able to pull off such a successful IPO in the first place. For someone looking at online investment options, the drone sector feels like the new frontier. However, the risk is that SWMR is a micro-cap player in a field that will eventually be dominated by giants. If you're managing an individual brokerage account or using the Interactive Brokers platform, you have to ask yourself if SWMR can scale fast enough to compete with the R&D budgets of the primary defense contractors. Comment below how many shares of SWMR you currently hold, or if you think the recent drop is a buying opportunity or a warning sign. The financial health of the company is the most significant reality check. With only $309,000 in revenue for 2025, a 6% decline from the previous year, the growth story is currently based entirely on future potential rather than current performance. The net loss widening to $8.5 million is a red flag for any investor focused on fundamentals. While the company claims to have a backlog of over $16 million in potential contracts, the conversion of that backlog into actual cash flow is the hurdle they must clear. In the world of tech-heavy IPOs, we often see companies trade on hope for the first few months. Eventually, the earnings reports catch up. For those using Schwab Intelligent Portfolios or a SoFi robo-advisor, these types of stocks are usually excluded or heavily weighted towards the high-risk end of the spectrum because of this exact financial fragility. Looking at the technical side of the trade, the volatility we've seen in the last few days is characteristic of a pump-and-dump cycle, even if the company itself is legitimate. The rapid rise to $65 followed by a crash back toward the $20 creates a trapped layer of investors who bought near the top. These investors are now waiting for any small rally to sell and break even, which creates overhead resistance. This means that even if good news comes out, the stock might struggle to go back up because of the sheer volume of people looking to exit. If you're trading through the Fidelity mobile app or the Robinhood app, you can see this reflected in the order flow. Sell orders are stacking up at the $35 and $40 levels. The future catalysts for SWMR will likely revolve around two things: new government contracts and technological milestones. If they can announce a partnership with a major US or NATO defense prime, it would validate their software on a global stage and provide the institutional adoption Eric Prince mentioned in his letter to shareholders. Additionally, the company is looking to expand beyond Ukraine, opening offices in Warsaw and targeting markets in Asia and North America. This geographic diversification is essential for reducing the risk associated with being tied to a single conflict. For the investor practicing online investing, these are the realities that need to exceed the current market expectation. There is also the risk of regulatory hurdles. Autonomous warfare is a sensitive subject, and as the technology becomes more prevalent, we should expect more scrutiny from international bodies and national governments. Any legislation that restricts the use of autonomous lethal systems would be a massive blow to SWMR's business model. This is the kind of tail risk that often doesn't get priced in during a hype-driven IPO, but becomes a major talking point once the dust settles. When you are looking for investment help, it's these non-financial risks, geopolitical and regulatory, that are often the most difficult to quantify. Expectation versus reality is the heartbeat of the SWMR trade. The expectation was a revolutionary shift in warfare that would make early investors wealthy overnight. The reality is a company with brilliant software but almost no revenue, facing a massive net loss and incredible market volatility. The stock is currently in a price discovery phase, where the market is trying to decide if the Battlefield data and the Eric Prince connection are worth a valuation in the hundreds of millions of dollars. As of right now, the market is voting no with a 28% sell-off, but in this fast-moving sector, sentiment can change with a single press release. To wrap this up, the story of SWMR is a classic example of a narrative-driven stock meeting the cold, hard facts of the market. We started with a live price of $26.36, a massive drop that signaled the end of the initial IPO honeymoon. We've looked at the incredible promise of their drone swarm AI and the